Ladies and gentlemen, good day and welcome to the Q1 FY23 conference call of Century Enka Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone telephone. I now hand the conference over to Mr. Anuj Sonpal from Valorem Advisors. Thank you, and over to you, sir.
Good afternoon, everyone, and a very warm welcome to you all. My name is Anuj Sonpal from Valorem Advisors. We represent the investor relations of Century Enka Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings call for the first quarter of financial year 2023. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and financial quarterly review. Now, let me introduce you to the management participating with us in today's earnings call and hand it over to them for opening remarks. We have with us Mr. Suresh Sodani, Managing Director, and Mr. Krishna Lacharya, Chief Financial Officer. Without any further delay, I request Mr. Sodani to start with his opening remarks. Thank you, and over to you, sir.
Thank you, and good afternoon, everyone. I would like to welcome you all to our Q1 FY23 earnings conference call. I hope you and your loved ones are all keeping safe. Let me brief you on the operational highlights for the first quarter of financial year 2023. We had a healthy growth in revenues and volumes in Q1 FY23 compared to the same period in previous year, which was obviously impacted by second wave of COVID. Our overall sales volume of Q1 FY23 increased by around 18% year-on-year to 17,598 metric tons. In case of nylon tire cord fabric, overall demand has moderated slightly as tire companies are yet to achieve optimal capacity utilization. There was a steep correction in Chinese NTCF prices, however, imports were muted. Medium to long-term prospects remain positive, supported by robust exports, pickup in OEM demand for tires, restriction on tire imports, and anti-dumping duty on Chinese radial tire imports, as well as pickup in overall economic activity. In case of nylon filament yarn, we witnessed better volumes in a traditionally weak quarter, although the pass-through of cost increases is becoming difficult incrementally due to high absolute prices of yarn and slowdown in China, leading to dumping of cheaper NFI in domestic markets. Caprolactam prices remained elevated during the quarter, although prices in China have corrected significantly in Q2 FY23 and is having an impact on NFI prices. On capex front, as you are aware, the company has undertaken capital expenditure plan of over 300 crores to strengthen its competitive position in tire reinforcement market through modernization of plants, augmenting capacity, as also increasing capacity of draw texturized yarn and mother yarn. All capex sanctioned by the board are running as per schedule, with orders for all long delivery items being placed on reputed equipment manufacturers. The cash outflow for capex in Q1 FY23 was around rupees 72 crores, and the projected cash outflow in FY23 is expected to be about 200 crores on the ongoing capex plan. We target commissioning of NTCF projects in Q4 FY23, while target commissioning of full capacity of polyester tire cord fabric is expected by Q4 FY24. Value addition and expansion in NFI capacity is expected to be completed by Q4 FY23 and Q4 FY24 respectively. Now I request our CFO to brief you on financial performance.
Thank you, sir. Good afternoon, everyone. The operating revenue for Q1 FY23 stood at 568 crores, which represent an increase of 34% year-on-year. EBITDA for the quarter stood at 61 crores, which was a decline of 0.5% year-on-year, and this represented an EBITDA margin of 10.76%. Profit after tax, we reported at 40 crores, which was a decline of 5.2% year-on-year, and PAT margin was at 7.1%. to give product-wise numbers, product-wise sales increased for NTCF by 15% year-on-year at 285 crores, while for NFI increase was 60%, as mentioned by Sodani ji. Last year it was impacted by COVID second wave, so sales stood for NFI at 245 crores. Now we open the floor for questions and answers. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. The first question is from the line of A.M. Lodha from Sanmati Consultants. Please go ahead.
Hello. Am I audible, sir?
Yes.
Sir, I have two questions. I require clarification regarding power and fuel cost in the quarter has gone up considerably. So we have the power plant, this coal-based power plant, sir?
No, we don't have any captive power plants. We are connected to grid power in Pune as well as Bharuch plant. We do utilize open access to draw power at cheaper rates, but we don't have any captive power plant.
Sir, what is the average cost of the power used by the company during the quarter?
For our Bharuch plant, it was somewhere around 8 rupees 40 paisa. For Pune plant, it was around 5 rupees 30 paisa.
Sir, why don't the company considering when the company is cash surplus and even in Godavari, EC plants are putting up the solar power plant, why don't the company consider to put up the solar plant, green power, that is a solar power plant, to contain the cost of the power in the future years, sir?
Yes, we are doing it for our Bharuch plant. We have gone into group captive, which is a hybrid of solar and wind, and this will be commissioned somewhere in the month of March. So with that commissioning, nearly 30% of our Bharuch requirement will be met from this captive source, group captive source, which will be cheaper compared to the normal.
But still 8 rupees 40 paisa is too high compared to the solar power, the cost of the solar power generation, including interest on the investment which we consider. So you should plan the bigger power plant in the Bharuch, because 8 rupees 40 paisa will become 10 rupees in coming 2 years' time.
We have taken the maximum available capacity as per the group captive scheme. There are restrictions on which we can do, and this is the capacity, maximum capacity has been taken, which will meet our about 30% of the requirement at Bharuch.
My second question is relating to demand status of the 229.27 crore in the excise department. One thing is pending appeal, tribunal appeal. Another matter is pending at Supreme Court. Can you put some light on this, either any recent development or what is the status of the both things?
So the demand, which was at around 230 crores, has been reduced to 7.3 crores now. So and the company is in appeal to Supreme Court, and as per the legal advice which company has received, even that 7.3 crores, there is a good chance that that demand may not materialize. Our appeal is there in Supreme Court, and we are pursuing it. But there is no development in last 3 months in this regard.
Okay, sir. But what is the matter pending with appellate tribunal? Has the department has filed that their appeal with the tribunal against the order of the commissioner?
Yes. So the reduction which the commissioner appeal has done from 230 crores to 7.3 crores, department is in appeal, but it is more of an administrative appeal which they have done, because in our view, whatever correction has been done in demand has been as per the earlier order of CFED. So it is as in line with that order only. So as and when matter will come up for hearing, we will know more on the matter.
Sir, my last question is on.
Excuse me,
We have got.
operator. Mr. Lodha, may we please request you to come back?
Okay. Okay.
The next question is from the line of Shubham Agarwal from Equitas Investments. Please go ahead.
Yeah, thank you for the opportunity. Good afternoon, everyone. So my first question is slightly near term. So YOY, we have seen both revenue and volume growth, obviously on a low base, but it seems like Q1, QR margins are on a declining trend. So firstly, I wanted to know how grave is the China situation, because they would be competitive in terms of raw material pricing, and how do you guide the margin going forward? Thank you.
First of all, I think you rightly said that the comparison is more with the last year Q1, because we have seasonality, particularly on the NFI side, and even in that scenario, the traditionally weak Q1, we had good numbers both in volume as well as in turnover. China has been unstable mainly because of the lockdowns that have happened in various cities and areas, which has impacted their value chain and supply chain. So certain products, right from lactam to even the fabric, have been either being higher or lower, and which has led to demand imbalance and surplus stocks availability in various parts of the value chain. And that is what has disturbed the market even in India, and which we are seeing it also in some of the products. We expect that now, since China has opened up, even with some restrictions, that in Q2 and most likely in Q3, things would stabilize, and that would would revert back to normal practices that are there in China. I mean, we have been operating in the same environment of China's competition in past as well. So we expect that Q3 onwards, it should become more normalized, unless the COVID situation again becomes critical and China takes a very hard view on lockdowns and other administrative matters.
Fair enough. But if I compare the realization of what Chinese are dumping at what price in India compared to our ask, what's the difference currently?
See, we cannot give a generic answer, because China sends material from lactam to chips to yarns to even fabric. So it's varying from product to product, and then there are multiple yarns. But as I said, it becomes a challenge with the holder of the stocks to sell rather than hold it for a price in China. And that is what we have seen, particularly in later half of Q1 and in Q2. However, the volumes are not significantly higher. They are higher, but it is not a case of gigantic increase in import terms. Yes, the pricings have been, as I said, this happens when the value chain is disturbed, and if some players want to reduce their stock levels, they would sell at any price. So this would not reflect a normal pricing level with respect to the industry.
Okay, got it. And so secondly, my question was with regards to the land. So you in the last quarter mentioned that if there is any update, would you like to share with regards to usage of the land? Yeah,
no, there has been no update. As I said, these are not short-term things which can happen. I mean, as and when it happens, it will definitely be announced as part of our presentation. But there are no updates. We keep looking for opportunities, and as and when something materializes, we'll inform.
Okay. And lastly, sir, what would be our caprolactam current buying price?
Sorry?
Caprolactam currently trading at around $2,000 per metric ton.
So almost $300 correction in last few months.
On an average, last quarter was at around $2,200. So
okay.
From 2,200, it is now at around $2,000.
Fair. Thank you, sir. I'll come back in the queue.
Thank you. The next question is from the line of Pranav Jain from HDFC Securities. Please go ahead.
Good afternoon, everyone. Thanks for the opportunity. So we have made an investment of around 26% in ABREL Century Energy Limited. So what is the rationale behind it and the amount invested, and what returns do we expect from the same?
So this investment is for group captive, which we are doing for our Bharuch plant. So at Bharuch we are putting up 10.5 megawatt group captive project, which is solar plus wind. And for that project, there is a requirement that we invest 26% in the SPV, which has been formed for this purpose. And total investment expected in the SPV will be around 8.8 crores. And this is not for the return on investment, it is on saving of power. So power cost saving will be there over the period, and it is quite attractive.
So how much savings do you expect from this investment?
So our expectation is that if the power supply is as per the expectation, it will be around 15 crores saving per annum.
Okay. And so second question regarding the realization per ton trend. So our realization per ton is increasing on Q1Q basis. So is it due to increase in the NFR NTCF or NTCF volumes, or it is mainly because of the prices, or mainly because of the volume mix?
So it's mainly a reflection of the price increases that were there compared to Q4 in the underlying raw materials. Some mix changes do happen between the products, but the primary reason is increase in the base pricing, raw material pricing.
Okay, sir. And sir, lastly, our operating margins at the lower end. If you see in this quarter, it is somewhere around 10.5%. So, like, when will we expect this to rise? Like, what is your guidance regarding this?
Our guide, I think our normal expectation of margins is in the range of 10 to 13%. And it will keep varying based on the raw material pricing, because that impacts the margin calculation as well. So as I said, the Q1 pricing of raw materials were higher. It also had an impact on the margin percentage.
So, but if you said that the caprolactam prices have corrected like around $200 per ton. So, like, apart from this, so the major was the power and fuel cost. Major contributing factor was power and fuel cost?
Yes, in the EBITDA margins, yes, one of them is also power and fuel, which have increased significantly compared to Q1 last year, and some increase even compared to Q4. There's definitely, and that's industry-wide, economy-wide phenomena because of the underlying pricing of coal and other fuel costs.
Okay, sir. Thank you so much. I'll come back in the queue.
Thank you. The next question is from the line of Vikas Gupta from AV Concall. Please go ahead.
Thank you for the opportunity, sir. So we are planning for a capex of around 300 crores. Is it right?
Yes.
So how much might be the cash left after doing this capex?
How much would be, sorry?
Cash. How much will be the capital or cash that will be left over after completing this capex?
We will be sufficiently funded on our liquidity even after spending 300 crores based on the current quarter and the likelihood of similar performance in future quarters. So we expect that the entire spending that we are doing in the current financial year would be out of the generations we do in the current. So we can expect similar levels of cash flow at the end of the financial year.
What might be the idea to utilize the cash after this capex cycle gets end?
No, we keep evaluating opportunities for further growth, and these are tested and go through a process of rigorous proper strategy part of it, and also that it is to be presented before the board. So during the year, if we come up with something interesting and looks good long-term bet to on our, keeping our strategic fit, we will utilize that the surplus fund. Idea is not to keep this fund idle, but utilize it for more productive use.
Okay. My second question is related to the receivable. So, is there any receivable from Birla Tyres Limited?
Yes, there was a receivable of around 7 crores from Birla Tyres, which were fully provided a year back. And so there is no exposure to Birla Tyre which is unprovided or which is open for.
Do we expect this to get back to us? Any update on this?
So this Birla Tyre is in NCLT. Receiver has been appointed for Birla Tyre, and it will all depend on what is the realizability of their assets. So we are hoping that some part will be recovered of this. But as of now, company has fully provided for those receivables.
That's it from my side. Thank you so much once again, sir.
Thank you. The next question is from the line of Anand Mundra from My Temple Capital Advisors. Please go ahead.
Hi, thank you for the opportunity. Sir, I wanted to understand that after the capital expansion that we are planning, the capex, will our margin profile change? Currently, you mentioned it's around 10 to 13%. So, do we expect that to change after the capex is done?
Difficult to comment because once these are markets which are volatile as well as, but we expect our internal estimate is that it should remain in that range on a higher base, higher turnover, because markets are determined by, margins are also determined by how our end user segments, both tire and textiles, are doing. And their health will also determine the margins that we earn in the company. So we expect that this should remain in this range, but there could be upsides and some volatility depending on how other factors play out.
But in NFI, sir, we are going into some more value-added products. Am I correct? I think after the capex. So, we can expect some kind of at least margin increase in the NFI segment. Is that understanding correct?
Yeah. Obviously, the purpose of doing value addition to certain products is to improve margins. But these are not significant in terms of the overall capacity. It is more of portfolio adjustments and making products which are better margins and which are more acceptable to the market. As we mentioned in the last call, we expect that by FY25 the top line should grow by 20 to 25%, and that should and margins in that range should remain 10 to 13%.
Okay. So my next question, sir, is so we are getting into polyester as well now. We're planning to get into polyester. So what would be the raw material for PTCR?
These are polyester chips, which are available both domestically and internationally. And thereafter, it goes through a process and then finally made to a polyester tire cord fabric.
So is there adequate domestic availability for these polyester chips, or again, like caprolactam, we'll have to be dependent on imports?
No, polyester domestic availability is better than nylon, caprolactam or nylon chips. Caprolactam or nylon chips. So polyester is, there are two domestic producers as well as more international producers, even outside China.
Okay. And in this also, will we have the capacity to make chips ourselves in polyester, like how we have in nylon?
No, we will be starting with purchase of chips because that's a large volume business, and we don't intend to get into chips manufacturing, polyester chips manufacturing.
Okay. And sir, one more question. So I read in the annual report that we are exporting some green polymer chips currently. So is that the only export that we are doing, or are there other products also that we are exporting?
So we do export some quantities of yarn, and that is more to develop certain markets. And these are normally some specialized yarns, some special effects required by the customer. But that volume is small. The larger volume of exports is green polymer chips.
And is this scalable, or the green polymer chip opportunity in exports, is this scalable, or this is where it will plateau, or what is the plan here?
No, currently we use our own internal waste and convert it into back to polymers and then convert to chips. The scalability will come if we have to buy this waste from outside, and which is a very difficult thing because the waste come in all kinds of mixes, whereas when we are using our own waste, we are sure of the quality and what is going into that. And this is subject to certain international certifications, so we have to be very sure of the quality of the product that we are exporting. So in the interim, we don't have any plans to expand this capacity. But if opportunity arises and there are possibility of getting raw materials, assured raw materials in terms of quality, we could look at this possibility as well.
Okay. And sir, what is the opportunity that we have in terms of exports to develop the export market? Because our export presence is so limited. Is that the focus, or we are currently only focusing on expanding domestically more?
No, the focus currently is on domestic markets, which is growing, and obviously the realizations are also better compared to export market. Exports would be mainly niche products where we get better realizations compared to domestic markets, or there is a demand for certain products which the domestic market is still not developed for.
Okay. All right. I have a few more questions. I'll get back in the queue. Thank you.
Thank you. Reminder to all the participants, to ask a question, you may please press star and 1. The next question is from the line of A.M. Lodha from Sanmati Consultants. Please go ahead.
Thank you, sir. For follow-up, there are 2 follow-up questions, sir. And there is total expansion of 300 crore. Can you give, sir, a split of in NTFC and the police pilot airport?
We, as mentioned, we are in single segment, so both on turnover, on volumes, everything is on singular basis. But the majority portion of this expansion is on the reinforcement business.
Yeah. Sorry, sir. Can you repeat it?
Reinforcement business. This is the tire cord segments. Majority of that is on tire cord segments.
It has been mentioned in the presentation, the NTFC Q4 FY23 and polyester tire cord FY24.
Yes.
So just I wanted the breakup of the investment in these two, this total breakup of these 2 lines, nylon tire cord and polyester tire cord.
We, as mentioned, we see these are products that are mainly, we are into synthetic yarns business and then manufacturing products out of that, both in terms of, so we are giving only the sales breakup, and for competitive reasons mentioned earlier also.
Okay.
Would,
sir, but can you just tell us in this how much turnover we can expect on full capacity utilization of all your debottlenecking and the fresh capex?
Yeah. So once these are commissioned in FY25, we expect a top line growth of 20 to 25% on the baseline price of 2020 to FY22, which will keep varying if prices go on up and down. The numbers could change, and if the underlying raw materials change. So we expect about 20 to 25% top line growth.
Fine, sir. My second question is, how much cash and cash equivalent we have as on 30th June 22, please?
See, if we had to mention that, we would have given that. This would be given along with the balance sheet in the September. But as I mentioned earlier in an earlier question, we have sufficient liquidity, and by the year end, we expect that the current capex spend would be done out of the operating profits of the current year.
Sir, why I am asking, sir? I am asking from the point of view that because I have observed that the management holding is very low in this Century Enka. When you have the surplus cash, why don't the board management consider the buyback of these shares? Which will not only increase the holding of the management, if management does not participate, and it will be beneficial to all our minority shareholders. So this is a purely a suggestion, sir. Suggestion when the company can do the buyback of their own shares to increase the holding, because the low holding always in our investors' mind, a very low holding of 25, 27, 28, 30% is not good for any management.
We'll convey your suggestion to the board. That is something that only the board and promoters can decide.
Yeah.
We'll convey your suggestion.
Thank you, sir. Thank you. Thanks a lot for the opportunity, sir. Thank you.
Thank you. The next question is from the line of Anant Mondra from My Temple Capital Advisors. Please go ahead.
Sir, wanted to understand what are the different products that you manufacture at Pune and Bharuch? How are they different? Or they are the same product?
Actually, both the plants manufacture both nylon tire cord fabric as well as nylon filament yarn. Only difference is nylon filament yarn has multiple products and a large number of SKUs, which are divided between both the plants at depending on the past and the equipment that are there. In case of NTCF, both plants have the facility. We are now putting up a dipping facility at Pune, which was not there. That will also get commissioned in Q4 of this financial year. So on NTCF, it will be similar at both the plants.
Okay. And sir, what is the current value of the Mahad land that you are planning to sell on our books?
No, we are not trying to sell that land. As we had mentioned earlier, we are looking at opportunities either to utilize it gainfully for some of our products or different expansions. And as and when we have not got any valuation done since we are not actively looking to sell that land. As and when any transaction or anything is due for announcement, we'll do as a part of our earnings presentation.
Okay. And sir, just one clarification to one of the questions that the earlier participant had asked. So we are planning to invest around 8.8 crores in the solar and wind captive group captive scheme, and the savings that we expect out of that is 15 crores annually. Is that figure correct?
Yes.
So on an 8.8 crore investment, we are envisaging a saving of approximately 15 crores.
Yes.
Okay.
Because this pricing of power is a fixed pricing and cheaper to the grid pricing. So when we enter into an agreement, the pricing is fixed, and that gives us the confidence that, and this is the saving is based on the differential between the current grid rates where we are drawing the power from.
Okay. And sir, my final question, so just wanted to understand how big is the unorganized sector in the NFY segment, and how big are the second or third competitors in this industry? So we are the biggest. How big is the second and third largest competitor that we have, and how large is the unorganized sector in this?
Actually, unorganized segment is the largest, on a combined basis. Because this is a very modular business at low investments. Many people get into with small capacities. The next competitors are in the range of 10 to 15% and lower, next 2 and 3. But the majority on a combined basis are on unorganized basis.
And has there been a decline of the presence of unorganized sector in this segment, or they're maintaining their market share?
No, there is some decline, especially after the COVID. Many small scale but there are also new entrants, and So, I mean, it's difficult to keep a track on who's entering and who's leaving to a large extent. But based on the market information on not a very confirmed basis, these entries and exits keep happening.
Okay. And I am assuming NTCF, the unorganized sector presence would be far lower than the NFY segment.
So there is no, in fact, nobody in the unorganized sector in the NTCF, because that's a very technical product and to go through a rigorous approval process with the tire companies. So, and obviously also the investments are large. So there is no unorganized player in the NTCF market.
Okay. All right. That's it from my side. Thank you.
Thank you. Ladies and gentlemen, this was the last question for today. I now hand the conference over to the management for their closing comments. Over to you, sir.
Here, just a clarification. In one of the question I mentioned the power cost for Pune at 5.3. In fact, it is 6.6 rupees per unit because earlier it was there, then there is an increase in charges. So that is one clarification, and we want to thank all the participants for their active participation. And if there are any follow-up questions, you can always reach us. There is an investor relation link on our website, so your question can be put up there. Thank you.
Thank you.
Thank you, members of the management. Ladies and gentlemen, on behalf of Century Enka Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.